Hi guys, I'm Sujit. So recently, Ministry of Statistics and Program Implementation came out with India's GDP number on August 31st. So there was expectation in the street that India's GDP would be contracted by 15 to 18%. It would not exceed beyond 20%. But in reality, the numbers came out to be around minus 24%, which means the total production or consumption in April, May, June 2020 is 24% less than production or consumption in April, May, June 2019. What does GDP really mean? So GDP is gross domestic product of the country. It tells us about the total consumption and production in the country. So if GDP is growing, it tells us that people are buying more and more products than what they did previously. How is GDP calculated? GDP is constituted of four main sectors or four main engines. These are known as engines of growth. So first engine is the consumption demand from private individuals like you and me. We'll call it as C. This accounts to 56.4% of the GDP in India. The second biggest engine is the demand generated by private sector businesses or investment made by private sectors. We'll call it as I, and this accounts to 32% of our GDP. The third engine is the demand for goods and services generated by the government. We'll call this as G, and this accounts to 11% of our GDP. The last engine or the final engine is the net demand or the net exports. Let us call it as NX, and this constitutes very minute for our GDP. In this quarter, GDP of India fell by 24% thanks to the lockdown which we had in April, May, June. So during this period, the private consumption fell by 27% and private investments in businesses fell by 50%. Even though there was increase in government expenditure and exports, it couldn't compensate for the contraction made by the two main sectors of the GDP. So these two are the biggest engines, which accounts to 88% of our GDP. These two in this quarter saw a massive contraction. The main question here is, when can we see our economy recover? So post Unlock 4, people have started to spend their money, which in turn creates demand, which leads to increase in production of goods and services. This leads to increase in employment opportunity. By considering all these factors, we can see significant improvement or recovery in our economy by next year end. So when people earn, they have higher spending capabilities and they spend more and more. This cycle repeats itself and revives the economy. So how can government help in reviving the GDP of our country? First is by cutting interest rates on lending, which has already been done by RBI. Next is by reducing GST on goods so that there will be more and more production as well as consumption of goods, and the GST will be compensated by the volume. Third is by building roads, creating employment and paying salaries directly or indirectly to the people of the country. These are the main ways government can help in reviving the growth and GDP of our country. Hope this video was informative. For more such content, please like, share and subscribe.